Good morning, everybody. Welcome to the Mortgage Coach Friday Mastermind. Today, we're going to focus on tactics and strategies to help you guys win in a higher interest rate market. I was pretty selective with that word higher because, guys, it can go even higher. It is increasing. It has gone up over 2%. So you could just say it's high. But when you look at historically speaking, it's just higher. This is not actually a high interest rate market. It's just a higher interest rate market. So with that said, we're gonna try to unpack a lot of ideas and strategies where you can win, where you can turn a market like this into a competitive advantage for you. You know, call it the mob. You know, every loan officer's interest rate got higher. It got harder for everyone. But some loan officers are like, how do I use this to really distinguish myself with realtors, with builders? And that's what we're going to try to do. We are going to have Dan Keller joining us, but for now, it is myself and Deborah Bird as your co-host. What's up, Deborah?
Morning. How's everybody?
Good to have you, Deborah, and help me corral both Scott Nicholson, and when we do get Dan Keller, we'll bring him into the mix. And for our special guest today, we have Scott Nicholson, a top producing mortgage professional, a mortgage coach, grandmaster, and also the co-founder of Lender Launchpad, who's going to be sharing ideas and strategies to help you guys crush it. So Scott, let's open it up with your narrative on the market, and as someone who's always like looking to differentiate and learning to turn a market into an opportunity. Just give us a high level on how you're approaching this market, and then we'll get into ideas and strategies.
Yeah, I couldn't wait to get out of the pandemic and a low rate environment because it was tough. I mean, it's, just taking orders. There's nothing strategic, and all of that stuff, which was great. Everyone benefited from the consumer, but really who took the brunt of it were the agents, right? I mean, I saw a post in a very large agent group, and it was the meme going around, and it was just a group. I think it was, I forget the movie, and oh, look, LOs are calling now, refi market's over, and they're all laughing, right? And I got that burns. So that stuff that burns me because I get classified as that, and I go, bull crap, just wait how I can help you in today's market. So now in the high rate environment, so now we get to be, and Deb and I talked about this a few weeks ago, about being a tacticianer, right? And that's what we're going to pivot out of an order taker into a tacticianer. And I think I'm going to predict, Dave, this call, if rates maintain or go up, this might be the most valuable call a loan officer, a branch manager, a regional, even an owner can watch and learn. They might even have to watch it maybe 2 times to get from it. The point is this: here are the real conversations LOs are having in the street. Wait, Scott, your rate's 6%, at par, or 5 3/4, and you're charging me a point. And I laugh, I kid right now, and I tell people, shoot, when I put that out, my mom is going to shop me. The point is the consumer's in shock right now. They're not realizing how far these interest rates have gone up. And so what happens, it starts to manifest itself from loan officer turning to my regional. Let's say it's Dan Keller. Hey, Dan, bud, I need to make this transaction work. I need 75 bips just to, in a PE to make this happen. Banks are lowering their comps. Banks are lowering margins. So it's kind of that back to 2018, 19, where you get that margin compression again, and everyone's lowering because no one's a tacticianer. And so what I'm going to show you today is to be that tacticianer loan officer. And how you do that, you have to identify the problems of not only the consumer from a buyer, but also a seller. And then we're going to break those down, and I'm going to show you. So I'll give you an example of the 2 big ones for a buyer. And before I get there, my feel on the market, we're not in a housing crisis or bubble. We're in an affordability crisis or beginning of one. And I'll show you why, some graphs to show you that.
Okay, so before we go further, Dan will be here soon. I would want to remind everybody, this is a mastermind. So if you have questions, put them in comments. If you have some strategies you're doing, put those in comments. Scott used the word tactician. That's one way to describe who you need to be in this market. A strategist is another way. An advisor is another way. A problem solver. So there's a lot of words to use, but it's not a loan officer. I mean, a loan officer can take a great app. A loan officer can solve all the problems that need to be solved to close a transaction on time. And a loan officer can deliver a good transactional experience. That's not enough in this market. When your rates go up by 2%, and they're probably going to go up more, you need to be the strategist. You need to be the tactician. You need to be the mortgage coach, grand master, so that you can crush it. And one more analogy, and then we'll get into an idea or two with Scott, is I want you guys to think about it as going from playing checkers. That's what we've been doing for 2 years, to this is a market where you need to play chess. It's a little more complex. Now, I'd make the argument in every market, the chess player in the mortgage space is going to kill it, is going to have a competitive advantage. They're going to get more realtors. So, but you could get away with being a checkers player over the past couple of years. You just can't. You're leaving all kinds of loans on the table. You're completely missing the opportunity if you're not playing chess. So, just want to make sure we got Dan. What's up, Mr. Keller?
And the man.
Good morning, friends.
Hey,
All right.
hey, Scott's getting ready to share the first couple ideas, but before he does that, Dan, if you could just real quick describe the market as you see it now, and why you're excited about this market. Want to hear that? We heard it from Scott. Want to hear it from you, and then we'll just kind of ping pong ideas and strategies. But could you just describe this market in your words?
Yeah, it almost requires a counselor, a psychiatrist, because on one hand, I'm pumped. I'm excited. This is amazing. It's an opportunity for us as mortgage professionals to shine, to lead, to educate, things that I'm wired for, things that I think some of the top loan officers in the mortgage industry and the mortgage coach community are wired for. On the other hand, it's harder than hell. I mean, I'm up here in Seattle, and there's not a lot of inventory, and there's a lot of great loan officers up here and a lot of great realtors going after the few amount of people that are actually closing deals. I think King County or Snohomish County last month combined had about 2,000 closings. Add up all the loan officers, add up all the banks, add up all the realtors. There's a lot of people hunting for those 2,000 closings. So this is just, it's a snip in time. That's so mentally, this market's going to make us mentally tougher. We're going to learn so much. If you buy into what Scott's teaching, what Dave and Deb and Todd and everyone comes to teach every single week, we're going to come out of this little transition so much stronger, so much better. So I love this market. It's crazy. It's what is that? Bipolar, kind of up and down, up and down.
Yeah.
So one more thing, just a principle of what everybody to think about. We're going to dedicate the rest of this call to specific strategies to create a competitive advantage and get loans now and recruit realtors now. But I also want everybody to realize that this kind of market, when we're closing loans at 5%, and right around the corner we'll be closing loans at 6%. Guys, the industry, we're baking and making a refi pie. So there's going to be a pie a year from now, 2 years from now, where big refi pie is getting created. And it's not just like one loan today equals one loan a year or two from now. Guys, it's going to equal 2 or 3 loans. Because when you think about this, if you close a loan with someone at 6%, and if rates are going to go down over the next 2 years, or at some point they're going to see a 3 on it again, you're not just going to wait for 3. There's going to be a loan, at 4 something. There's going to be another loan at 3 something. So we're talking about, you're making a refi pie. Every loan you're closing today is going to equal. And by the way, if you close it with a total cost analysis, if you properly database it, if you're using tools like Sales Boomerang and HomeBot, guys, it's going to be a little bit rough, but we are going to kill it again and have another tidal wave at some point. Dan, real quick, how are you trending on production right now? You said it's tough, but are you still trending $200 million in production for the year?
No, absolutely not. Not 200 million this year.
What's it gonna be?
We're doing all right. I mean, last month, I think we were just shy of 9. The month before was a little bit tougher. It's, what I'm trying to do right now is I'm trying to go back and crush 2019's numbers, which was just right around 100 million. So if I can
100
go
million is the goal this year.
100%. Yep.
Cool. Well, thanks for that reality. So Scott, what is our first big opportunity and strategy in this market? And then Dan, be ready to either play off of that or share an idea, and let's just go back and forth. Let's go.
So I'm going to share my desktop, if that's right.
Yeah.
And
If we don't see it, we'll tell you.
okay, you see
And we
it?
see it.
I'm going to set the table. So let's go here. See that little graph right there? So this is affordability in Q4 21, right? Look what the interest rate is. Look what the income needed to qualify for the medium house. Great. Look at the next graph. Look at just a month ago, this was released. Look where the income needed and the rate. So what shocked me a little bit, like, wow, okay, I'm starting to get up there as far as the income needed to qualify. But look at the interest rate. So I did my quick math. Well, shoot, that's not right. So we're in Q2 of 22. The rates are 5.5. So now the income needed shot up 16% in order to get that medium home price. So like I said, we're not in a housing crisis. We're in an affordability crisis that's upon us. And people say all the time, and actually, Dave, you mentioned this, is I bring up this graph all the time, and I have a different spin on this. And this is that famous Fed graph of the rate history. So, hey, guys, rates have been up here, sorts, that's fine, but let's look at the data. And I pulled a time and apply, I forget, it was like late 79, 80. The average rate at that time was 12%. The average price for the home was 26K. The average income needed to qualify was 20,000, or actually the average income earned was 20,000. Take a guess on what the income needed at that interest rate in that moment in time. I'll help you. 21,000. So think about that. It's the first time in history that the income needed to qualify for the home exceeded the income earned. But don't tell me that, hey, rates have been up to here and all this stuff. Problem is, yeah, they were back then, but look at the income needed and what was earned in order to get that price point. Now move it forward into today, we're approaching 180,000 of income earned. And the median income that is generated in the state of California or in our county is like, I think it's 83,000 in the state. So the problem is we have an affordability issue, and a lot of these buyers are in shock. So LOs, this is what we're staring at. So I'm going to pull my mortgage coach up on a client. So this is how, and this is a funding that just happened 2 days ago. So this came
Scott,
to me. But
any chance you could put this link to this TCA in chat of Zoom, and we'll make sure for everyone watching this in Facebook, we get this in
Absolutely.
Facebook. And what should we call this? Scott Nicholson, what is this, a seller buy down, or what is it?
yeah,
What's it gonna be
this
called?
is going to be SBD plus gap.
Plus what?
Appraisal
Appraisal
gap.
gap.
Oh, okay. So guys, so Robert, when you share this in Facebook, call it the seller buy down plus appraisal gap TCA. And looks like we got a new TCA that we need to do in our training every Wednesday and Thursday. We do training. So go to our calendar, and what Scott's going to show you, we will make part of our training on our Wednesday and Thursday trainings.
So think of, here's where the LO is going to struggle. So lead comes in, they're coming in, they're trying to do a move up situation. They're coming in, the lender got their first quote from is quoting them 5.5, charging a point and making them pay 33,000 in credit cards. So think for a second, how are you in today's market, even if you have mortgage coach and all that, how are you going to solve this problem? If I was the first one up to bat, I'm getting rate shopped. But I was second up to bat, he's getting rate shopped. so I came in, and I'm going to add the second column here, and I'm going to refresh my screen. Here's how I came in and solved this problem. I'm going to raise the sales price from $790 to $809. There's my seller buy down, and I'm going to get $19,000 back in that seller buy down. I'm going to take his rate to 5.5 to 4 3/8. I guess take his payment down to $41.99, and I save him $337 a month.
And
Now
Scott,
think about
Scott, real quick, sorry to interrupt you again, but could you put that link now? Because I want people to be able to see the live feature.
Yeah.
So guys, Scott's going to put this link in here. And so if you are watching it on the total cost analysis, you'll actually see it move. So as he's adding another program, highlighting it, I just want people to get the full experience, Scott. Because also, guys, when you're doing a virtual training with realtors and you're teaching this strategy and you're telling this story, recommend that you get them the link to the TCA so that as you're walking them through it, they're seeing like, hey guys, this is what I do with all your clients. You know,
Scott Nicholson here.
So anyways, I'm watching it, Scott. Thank you for doing that, and sorry to slow you down there.
So think of how I'm going to deal with the first situation. We have issues. We have not only rate shopping going on, we have affordability issues going on, and he's being required to pay $33,000 in credit cards off in order to move up, right? So he's pushing all of his funds in to close. So I came in and go, wait a minute, here's how I'm going to present it. So I moved it up, 809, 19 back to seller buy down, 4 3/8 on a 30-year fix, 41, saved them. Now, not only did I not have to go to my regional or my manager, Dan Keller, who's not, I'm just saying, I don't have to go to Dan and go, hey, bud, I need 75 basis points in a PE to make this thing work, right? Or even more. And so what I did was, just because I structured it differently, not only did I win this purchase, I gave him the rate that's 1 1/8 under market. I dropped his monthly outgo $337. I only paid off $13,000 in credit cards, right? And I didn't have to ask my manager for an exception to get this thing worked. I have a full comp plan in here. And let me go one step further. And so the natural response was, let me get the chat out of there. The natural response was this: hey, Scott, how do I get, what if value doesn't come in? I have a problem with this. So I go, no problem. So in the third column, here's how I'm going to protect everybody involved. You buyer, and not only the agent, if we get the offer accepted. If we miss value in the third column, going all the way down to 768, I'm going to protect rate, I'm going to protect payment, and lastly, my cash to close only goes up $3,400. That's it. So I've accomplished my first goal. I won this transaction. I now have to accomplish the second goal, and this is the second issue we're facing with buyers in the market. How in the world am I going to get this approved by the seller? So here's exactly what I sent, and I'll post it in the chat. I called the listing agent and I texted the listing agent this presentation. And so what it is, it's the pre-approval letter that they can download, and it's the video I just shared with you. That's actually me speaking to the listing agent and explaining how and why we're structuring it this certain way. And so now when the listing agent opened the video and I showed her, hey, this is how the market's bearing in column 1. This is how I'm structuring in column 2. And here's the protection I'm for not only my client, but for you and your seller, in case we dramatically miss value, we're still going strong, we can close on time. Her response was, I'll spare the details, was awesome, took our offer over. So think about what I just accomplished here in this strategy. Number 1, I went up against competition and outplayed checkers and out strategically thought this person. Number 2, I eliminated 20,000 in credit cards not needed to be paid off. I didn't have to go to my manager and ask for a PE. I'm delivering something that would never be shopped. And lastly, I used the last mechanism, my delivery mechanism, which is a lender launchpad. I texted this over to the listing agent and I sold the listing agent and seller on why us versus the other offers. Done.
Boom. So guys, I put a link to this. I called it the Scott Nicholson digital pre-approval presentation, which has some valuable content in it. It's got a killer total cost analysis where Scott is clearly a strategist. He is clearly delivering mortgage strategies, not mortgage rates, which is a much better thing to sell. Dan, anything you want to say about this or anything you want to ask Scott after seeing this?
Well, I'm a huge fan of Scott and what he's doing with not only his software, Lender Launchpad, but just strategy. Right now, in what I'm going to talk about in a few minutes is this is a market that is designed for professionals. This is a market, and not just professionals, all pros, like all stars. And dude, that's an all-star presentation. You've taken the focus off of just what is my rate and qualifying for a mortgage and tied it into strategy, got them thinking bigger. I love it, man. And I think all of us need to be doing this. Every mortgage planning conversation or consultation needs to be leveraging Mortgage Coach and leveraging strategies like this.
So guys, if you're watching this on YouTube, we will have the links to both of these, Scott's seller buy down plus appraisal gap TCA, plus Scott's full digital pre-approval presentation. Deborah, anything you want to ask Scott or anything you have to say?
Well, we've been talking about how to gain market share, and this right here is how you show that you think differently, that you're not the average loan officer. And so I would literally copy this exact scenario, which guys, I made a post and I even posted it in the Mortgage Coach group. I didn't know the full story. So I just made one up and made a video of how you could story tell with this kind of scenario. But this is where you need to be going into different agent offices, hosting events at your office, driving traffic so that you're educating listing agents and buyers agents that this is how you can win. Exactly like the title of this call of how do you win in a high interest rate market. This is a win-win for both the buyer and the seller. And think about hooks and headlines of, if you're a listing agent dreading those conversations of possibly having to start price reductions, which is happening. Yep. Then this is one way that you can combat that, because no listing agent right now wants to talk about a price reduction when most sellers are thinking it's going to be multiple offers and above asking price. So you can't make this a secret. It's an aha to win that one-to-one client that's in front of you, but there's so much market that you could dominate and be the pro if you shared it in masterminds and on social.
Yeah. And I want to remind you guys, there's also starting to see homes that are, lowering their list price, and you could come in to a listing agent and show them that, hey man, maybe you don't need to lower your list price. Maybe you can consider a seller buy down strategy like this. Again, we'll get into that in more detail. I just wanted to leave that as a placeholder, guys. Scott, I want to get Dan into the conversation and have him show a strategy. Anything else you want to share on this one before we bring Dan on stage?
Yeah, I won't. I'm just going to show you the exact same template, so to speak, on a different transaction. So think about basically the same week, submitted both offers. This one is a 5 3/4 condo. That's a tough one, not only to put a TCA together for a pre-qual, because you're going to get shopped. And if you just put 5 3/4, here you go, maybe an arm or whatever, you're going to get shopped. And that's why you have to present differently. So when I saw this one, I go, great, I'm going to go, this is a pre-qual, so I didn't have to beat anybody, but I go, great, here's what the market's bearing. I just put it down, but here's what we're going to offer. We're going to go above what you want to pay. We're going to go in at 540. I'm going to take rate to 4 3/8, take payment to here, save you $249. And not only that, I'm going to protect you. And if value misses, I have you. I have rate, I have payment, and cash to close only went up $1,800 in this case. Done. So I was checking all the single boxes. And then here's the actual presentation. I took his last name out for privacy. This is what we sent, and I'll post this in the group too. Sent it the same way. Uploaded as pre-approval. attach the Mortgage Coach TCA. This video went to the listing agent. They saw it, they got it, we explained it, we got a quick conversation, we opened escrow, done. So that's the formula right there.
Cool.
How much was that seller buy down, Scott?
That was 20. So
That was
we
what the
went,
seller paid to buy down the rate?
Yep. So we have, remember,
Scott Nicholson, Cherry Creek. So I wanted to
remember, they were fine with this offer, net getting 520. Their netting's the same amount. And that's why the appraisal gap works beautiful with the seller buy down. So, because we're going to go above and beyond to help my client, but we're not taking anything from the seller. And then lastly, that kicker is that third column. When you pair it with a gap, that's where it goes to a whole nother level.
Love it.
Cool. All right. Well, let's move to Dan. So Dan, give us a strategy that you're using to crush it in today's higher interest rate market.
Yeah, so I don't know if it's a strategy, it's a conversation. It's my go-to conversation that I'm having with everyone right now. So I think I'm trying to put myself in the seat of my clients because I've been there. I was there in 2006 and 2007. I got horrible advice. And that's one of the reasons why I'm such an advocate in the mortgage industry and so passionate about what we do, specifically here in the mortgage coach community around advice. I think your advice matters more than ever. So the talk track, the go-to conversations I'm having with every client right now is what I just said, kind of explaining what Scott Nicholson's doing. This market that we're in right now is not meant for amateur realtors and amateur loan officers. You're going to get whooped. More so, you as a consumer are going to get whooped if you're not working with a pro. Here's why. And I give them my story. Learned this from Renee Rodriguez. So now what I've done is I've come down from a professional. I'm now at the level of our customers, our consumers. And I'm saying, listen, 46 years of age. Yes, I rebounded and I've done quite well over the last 15 years, but I was lucky. Not every homeowner or home buyer back in 2005, 2006, who got bad advice, who got put in the wrong programs, who lost homes, who I never filed bankruptcy, but a lot of people did. They got bad advice and they weren't able to rebound. And now they're afraid. And because of that experience, it's gotten in the way of them investing in the stock market and investing in real estate. So what I want to do with you right now is I want to tell you that this is a crazy market. It's confusing. It's faster. It's moving faster than ever because what we were dealing with a month ago is not what we're dealing with today. And then what I do is I pull up slides. So every single client of mine.
Go ahead and show the slides. And
Yep.
guys, Dan is also going to be a guest this coming Tuesday. We're going to do a deeper dive on everything Dan's doing, but go ahead, Dan, show what you got. I just wanted to make sure people know there's more to come.
So I'm leveraging, whether this is on Zoom or it's in person, I'm leveraging content that I've created for homebuyer classes, content I've created just in general. So I tell my clients right now in Seattle, in the Seattle area, we have 2 counties, really 3 that surround Seattle. 2 months ago, we had 3 days of inventory. 1 month ago, we had 8 days of inventory. I got this data the other day for for April of 2022. There's 15 days worth of inventory. So I explained this to my clients that, hey, inventory is changing. The market's changing. When you have 2 days worth of inventory, you have 50 offers and you pay $200,000 of ask price. When you have a week's worth of inventory, 20 offers, and you pay $100,000 over ask price. When you have 2 to 3 weeks worth of inventory and rates going up, you might be able to get a home at ask price. You might even be able to negotiate closing costs. And so then what I try to do is I try to explain where the market's at, where the market's heading from experience. And then I'll pull up slides like this that we all have access to because our friends at Keeping Current Matters. I'll go over here and pull up inflation. Everyone's aware of inflation right now. Okay, so with inflation being where it's at, what do mortgage rates do during inflation type periods? And how long is this going to last? So I tell them based off of some economists that I follow and trust, they're saying it could last through the fall into the winter of this year. Cool, but look what interest rates do after inflation. It looks like they come down, don't they? So that transitions me into an interest rate conversation, a strategy conversation, where a month or two ago, it was like, I just need to get the house. Now it's, I might be able to get the house. It looks like I'm going to get the house. Oh, shoot. Should I buy the house? And then I'll go into an Instagram. I did it in 1 minute or less. Let's say you bought a home in the worst market ever, peak of 2007 or 2006. If you stayed in that home for 5 years with the 4 benefits for owning a home, the tax benefits, appreciation, forced savings where you're paying down your principal, you would have come out the other side with over 150% return on your down payment investment by staying in that house for a minimum of 5 years. So now we get to transition right into strategy. So Mr. and Mrs. Smith, tell me a little about what you guys are thinking. Are you thinking this is a 3 to 5 year type home, a 5 to 7, maybe a 7 to 10? So now we're talking strategy. I get through all of this and it paves the way now for a great mortgage coach presentation, because now I can share rates. And yeah, I'm sharing 5.5, 5.6, 5.7. They're ugly. And then I have separate slides that show, I use Mortgage News Daily. I use through Mortgage Coach, where we have the optimal blue numbers. And I show that, hey, listen, this is a survey of the top mortgage companies in America. As you can see per the report, we're right smack dab in the middle. We're never the best, we're never the worst. We're very competitive. But now I can have a great conversation around mortgage and strategy when I frame, Rene Rodriguez, when I frame the conversation. Most loan officers are, hey, tell me about your situation. Tell me about your budget. What are you looking to do? Cool, I'll get you a loan, a worksheet. Or I'll even get you a mortgage planning report. Oh crap, your rates are high. I see on the internet that they're this. So now you've got to work, now you're on defense versus I'm clearly taking control of the conversation, but I'm educating them through that. And I'm giving them the slide. There's 20 more slides here. I shared one of them on Facebook the other day. The other one is for my homebuyer class. I don't necessarily share that because I've put thousands of hours into that, but these slides are so important. I want to encourage every loan officer to make sure that they're framing conversations with data.
All right. So here's what I want to do. I want to give you guys a chance to ask Dan any questions or put takeaways. I'm going to throw it back to Scott for another strategy. And then Dan, I know you told me about a recent sell or buy down where you was it a builder? You want a new builder client?
Yes. Right? So I had a builder client of mine.
Wait.
Yeah.
Well, tell that story. That will be your turn. Like we're going to go Scott,
okay,
and then we'll come back to you. But Deborah, anything you want to ask Dan about in terms of what he just shared, or any takeaways you want to make sure everybody gets?
No, just that Dan has a Facebook group, and he had shared this presentation, and I had offered anyone in the group and anyone who's listening right now who's willing to take action. And this is, Dan was willing to share the slides, but I have recreated them in Canva that our team is willing to help rebrand for anyone who's actually going to use it to be that advisor and that educator and share it. You know, it does no good for us to spend this time and create it for people who then are just going to sit on it and not take action. So I'm very fortunate, and thank you, Dan, for both you and Scott. I mean, a lot of the content I create is just copying what you guys do and your commitment to sharing to the communities and to your social outlets that allows people like me to continue to learn and make content. But I also want to make sure I'm getting the content to people who care and have the same motive and same heart to go educate. So if your friction piece is you don't have the means or you don't know how to create the marketing materials, then we can solve that for you, and we can give it to you, but there's the exchange and the commitment that you take it to market and you be that captain of the wealth team for your community.
So make sure you guys check out plugandplaysm.com, schedule a demo with Deb if you want more. What's the best email if anyone wants to email you, Deborah?
marketing@plugandplaysm.com.
Right on, guys. Check it out. We'll have a link down below. So Scott, any questions for Dan, or do you want to get right into your next big idea?
No, Dan's spot on. I mean, it's you have to deliver the facts, the data, control the conversation, because if you don't, they're going to lead it right down to rates and fees, and you've lost it. So Dan's spot. That's why he's such a good professional.
All right. So Dan, just to tee you up after Scott goes, one, if you could share the link to the TCA you're going to show us. And guys, he's going to tell a story of how he won a new builder in a rough market, and he used a mortgage strategy to do that. So he'll demo that and talk about that. in about 10 minutes. And please share that link before you start going through it, Dan. And you're up, Scott.
So I gave you two reasons. I gave you two struggles buyers, right? Affordability, how to do it, but also how to get their offer accepted. So that was the last go around for me. So now I'm going to move over to the listing side or the seller side. So I'm going to tackle probably the biggest problem is moving up, right? Probably one of the biggest problems for us to solve. And so what I did is this is a presentation, it's a public presentation I share with my agents, I share with move up buyers or sellers, and I'm trying to solve that piece. And staying with the slides and keeping current matters, how I built this is I took some slides and I framed the story. And I framed in particular how rates are moving. So I took the KCM slides, loaded them in here, did my narrative on it. And then what I wanted to do, then I drove them to two total cost analysis. And so the point I'm trying to drive here for a seller wants to accomplish two things. Number one, I want to sell at the height of the market. Number two, I want to smoke and deal on whatever I'm going to go buy, right? Payment or price or whatever. So that's a hard problem to solve in today's market. We have the first one, and we might have a compelling story in which what I was explaining, rates moving up, listings moving up, price reductions moving in, let's sell now, and I can fix the second problem. And here's what I did. So I pushed them to the first TCA. Here's how I built this, simply put, is I showed them, here's where they're currently at. They're gonna net 400,000. Their move up goal is they want to get to that 1.3. The problem is, and the rates were a little lower than they are now, so it's even worse, and the strategy is more valid, is the way a consumer solves this is cash. I need not only to sell the net, what I get out of the net of my house, I need to liquidate retirements and assets to get in, because that's the only way you affix affordability to get that payment manageable. And I'm saying, no, you don't need to do that, because you can come in here at the same property. I'll structure a 7-1 arm and I can reduce cash to close. So I'll get you the same payment. You thought you had to liquidate funds, but I'm going to do it for $330,000 less dollars cash to close. So what I need is an introduction to your financial planner too, and says, hey, here's how we're going to structure this. We don't need to liquidate all of those funds. What I did in the fourth column, not only put the plan together to move up for a lot less money, I then brought in the financial planner, his financial planner, and I showed him, let's invest that $330 that I didn't need, right? Or what was left over. Let's go get 5%. So in 7 years, if they stayed put in the green column, their net worth is $780,000, $790,000. If they moved up, their net worth in 7 years is 1.3. There is problem solving, addressing the two needs. When do I sell? Probably now, but how do I make it manageable and feasible and the deal I can get? And that's how you're going to solve them. And not only that, I tied in the financial planner here. And this was the presentation I gave them. And there's a fixed one too. If they didn't want to get risky, not only that, they can download the TCA, which I have in a PDF they can look at too, if they want to get more granular into detail. So there's how I move up in today's market.
So stop sharing your screen real quick, guys. So think about this. Average loan officers and loan officers, they can close loans on time at whatever the prevailing market rates are. A mortgage strategist, a mortgage coach, is helping a realtor get a listing, is helping a family navigate this marketplace and make an informed decision. And he's getting a financial planner in the mix. So check this out, guys. And Dan, get ready to jump on stage. We're going to bring you up here in just a second. I want to remind you guys, like what Scott just showed was a move up analysis, but I want to give everybody a reminder. All of your cash out alerts, for anyone that has Sales Boomerang, all of your cash out alerts, every one of those is not only an opportunity to possibly do a cash out refi, but it could be a move up analysis. It could be a move down, a right size your home analysis. And here's how I make the case for that for everyone. This is some data that we have at Sales Boomerang that 40, back when rates were super low, and most people, when surveyed, would not refi for $100 in monthly savings. And 44% of people, and we're talking about when rates were in the threes, hadn't even thought about refinancing. So here's my message. If there's 44% of people that didn't think they should refi and people wouldn't do a refi and save $100, how are they expected to navigate their equity and their other liabilities? They're not. They need you guys. So this is a TCA that Jeremy shared a week or two ago. And this is a move down analysis. What I love about this is not only did he show, hey, here's your current home. It's $1 million home. You got $500,000 in equity. You could move down. And by the way, when you look at this, and he could have brought in a financial planner to help with this, he also showed, hey, what if you just got a better location, or it's still $1 million home, but it's just a different home? And a lot of people would be like, well, I don't want to do that. I got like 3% interest rate. My rate's going to go up to, 5%. Jeremy's always baking that refi pie. He's showing the customer, hey, in the future, this is what it's likely to be. So it's like, he's really closing multiple transactions. He's helping get a listing for an agent. He's helping get an agent a buyer that's going to be motivated because they understand the financial interest. And he's setting the stage and building his refi pie. So I just want to remind you guys that. And then I saw a post in here from someone that just said, hey, I'm new in the business, but I'm not afraid. Here's the deal, man. You can become a pro in a month. Like it does not take that much time to actually go from I'm a loan officer to I'm a mortgage strategist. I'm a mortgage coach. And that's what we're here to help you do. So two things. One, I want you to go to this Jeremy Forcier in our blog, the Jeremy Forcier 2 Loans Now Strategies, and go through this exercise. This would be a training for anyone that doesn't know how to do this. Go through this training. And then I want to remind you guys, if you go to our resource page, we've got on-demand 24 hours training, and we've got live training every single day. So to learn these strategies, like, I can't remember your name, but whoever said that you're not afraid and you're willing to get it, I promise you, if you do 20 to 30 total cost analysis this month, even if some of them are practice TCAs, and you attend a couple of these trainings, you know what? You're going to be a pro. You're going to be able to play chess, not checkers. Dan, any questions for Scott before we bring you on stage for your idea?
No, I love it. I love what you're doing, Scott. Huge fan. We've been talking a lot off record on some stuff, and it's amazing what technology is allowing us to do today to make ourselves more pro, close more deals.
Deborah, anything you want to say or call out before Dan jumps on stage with another strategy and idea?
No, echoing what Dan said, when you can make it as easy as sending a link for a listing agent or a client, and they can click and not only see a pre-approval letter, but all of your possible solutions with the TCAs and your explanations on the side. It's a super slick, modern delivery system that just makes it very easy, no matter where a client or agent is at in this very busy world that we live in today. So I love it.
Right on. Well, Dan, tell us how you want a new builder, and tell us the story, and then show us how you did it with the total cost analysis.
Yeah, real quick, because I think you hit a huge point, Dave, and I want everyone to listen to this. Dave just talked about anyone can be a mortgage coach pro. It just starts. I'm teaching this book right now to about 65 loan officers and a really good sized group of realtors called Atomic Habits. If you have not read that book yet and you're in business, go read it, and then read it again, and then read it one more time. And then the fourth time, I want you to be able to teach it. But the thing about Atomic Habits is just making yourself, what if you focused on just one thing and you just got 1% better each day at it? Mortgage coach, a mortgage planning presentation, talk track to your clients. Do you think your business would go up? Do you think your conversion rate with realtors would go up? It would. So leveraging what Scott's talking about, his technology and mortgage coach and these seller buy down information or slides is so important to be polishing yourself as a pro. So I didn't want to miss an opportunity to really drive that home, Dave, because people are always like, Dan, who's your marketing person? And Dan, who does your videos and helps you? I do it all. It's me. I had to learn how to edit. I had to learn how to do this stuff because I didn't want to wait for someone. Deborah wasn't around 5 or 6 years ago for me, and I couldn't wait for someone, nor could I afford to pay him a bunch of money a month. So I'm like, what the hell? I'll figure it out myself. And I did it, but I didn't come from a marketing background. So 1% better each day. And then it just compounds. It's compounded interest in your business. So I wanted to drive that home. Thanks, Dave, for sharing that. Anyone can be a pro like Scott, like Deb, like any of these mortgage coach pros here. You just got to work a little at it. What I wanted to do, and I learned this from Dave about 5 or 6 years ago, I learned the importance. And I think it was an interview you did with Josh Metal, or I forget who, but someone said really what the customer wants is options. And that's what Mortgage Coach does so well. It gives the customer options. And so in a market like this, the last thing our clients need, anyone that I'm sitting in front of, I do not want them feel like they're backed into a corner and they only have one option and it's going with me, or they only have one option and it's rate. And so what I like to do with the talk track and with the Mortgage Coach is, and mad respect to what Scott's doing, because I'm doing it too with seller buy down. But I'm adding one thing, and I know I'm sure Scott's doing this too in the right context, in the right scenario. But I'm also saying, listen, I believe wholeheartedly, professionally and personally, because I'm a real estate investor too, that rates are going to come down in the next 6 to 18 months. You got to study the numbers. Inflation happens, recession happens, rates drop. It's just historical data. And I show them the slides. Now they have options. It's not just buy the home at 5.75. It's not just now 2-1 buy down. It's not seller buy down. Now I'm talking about, what if you did none of that and you bought the home and you paid on it at 5.75 for 12 months and rates dropped to 4%. So I actually shared this with a client. This is a real live TCA yesterday with a client north of Seattle. Purchased, the numbers are a little bit lower. So don't think that you can buy a home in Seattle for $500,000. This is a little bit further north, but I talked them off the ledge. They are not going to buy because their financial situation. The final column, I put wait. If you waited a year, where maybe you can qualify for a little bit more of a home, because I do believe there's going to be a pullback in real estate. I don't think that we're going to see massive drops in values, but there's going to be a pullback. So potential for not having to compete with 55 other offers. So let's say you waited and interest rates dropped into the 4s. And so this was, listen, and I did not tell them that I think they should wait. I said, hey, you could buy at $400,000 right now and your payment's $26.91 a month, $400,000 house. Or you could wait, maybe get something a little bit more in a different school district or community, wait for rates to drop, because I think they will. And that $500,000 house, so $100,000 more with a little bit better loan program, because you have a little bit more money to put down, would be $28.31 a month. So guys, it's not up to us to say, hey, you need to do this or you need to do that. It's up to us to provide options, commentary around the options, and then go from there. Totally switching gears on the conversation that I had with Dave the other day. I'm not a pro at 2-1 buy downs. I think I've done 2 in my whole entire life. All right. And it was back in 2018, I believe, is when I did those. I think this market's a lot like 2018's market, but I saw some advertisement on the internet for it was like a 4 something 30-year fixed. And I'm like, no, that's garbage. That's a 15-year. Well, I did a little bit more digging, and it was for a buy down. It was for it was a 3-2-1 buy down. And we don't have a 3-2-1 buy down at the company I work for right now, but we have a 2-1. And then I was on the phone literally 2 days later with one of my builders, and he was asking, he goes, hey, one of the big national builders right now is offering a 2-1 buy down. Is that something you guys do? And I was like, absolutely. I'm working on a video right now. So I went, gathered the data, and I put together a report for this builder on a 2-1 buy down. And this is what blew his mind. So $900,000 purchase. I used Mortgage Coach, but Mortgage Coach doesn't have a 2-1 buy down feature that I'm aware of. So I had to doctor it like Deb does. So what I did is $900,000 purchase. If they did a 2-1 buy down, here's how it would look. So you get a 3.5% 30-year note for the first year. The second year, it goes to 4.5. And then the third year on, it's 5.5. Hey, but what about a permanent buy down? For the same 3.25 points, you could do a permanent buy down and lower the interest rate to 4.875. Now, this is where the builder, this caught his attention. We've done this before. Or the fourth option, which a lot of real estate agents and builders will do, is they'll just drop the purchase price when the market gets tough. That builder would have to drop the purchase price to $845,000 to realize the same savings as a as a permanent buy down. So instead of the conversation being a 2-1 buy down, which I don't think 2-1 buy downs are great. I mean, if you're only going to be in the house for 1 or 2 years, sure. Let's start having a conversation then around an ARM if that's the case. So 2-1 buy down is being used for advertising. So, hey, don't hate the player, hate the game. So if you can't beat them, join them. So I now have a 2-1 buy down. I can advertise a 3.5% 30-year fix. It's 2-1 buy down. So I created that. He shared it with another builder, which got me a phone call and a meeting with that builder, and then shared it with another builder that I already know that I get to go meet with next week. So got content, being able to educate people on their options. The Wayne Gretzky, his success was he never skated toward the puck. He skated to where the puck was going. Guys, we're in a high interest rate market right now. You're going to see your competitors advertising really low interest rates with 2-1 or permanent buy downs. Might as well start doing it now, or at least have the video. So when someone asks, hey, hold on, Ryan, real quick, I'm going to text you this. And then I text them the YouTube video that I made, edited it, and explains it.
All right, guys. So that was a home run, everybody. I mean, that was pure gold. And did you hear Dan? I mean, he's got a meeting with a new builder. He's got a meeting with another builder that he knows, but this created a conversation, and he completely wowed a builder with this one strategy, with this one idea. You notice how he has a TCA to show that, and he's got some social media. So we're going to go deep with Dan this Tuesday. So Dan, I want you to forward me all the TCAs you're going to cover next Tuesday, so I have them in advance. So we'll have a whole drill down with Dan coming up. Scott, any questions or comments on that?
Yeah, that was good. I mean, that's exactly so. But I'm with Dan on that. I do believe we're going to move into recession. We might get a drop and all that. But I think if you just stick and just offer the 5.5 or 6%, you're going to get shot. So give them options. Like, let them have like, oh, okay, I didn't realize I had that, and let them decide. Like, Dan, I believe you. I think there's a recession based on my search. Let's just take the 5.5. Because if you don't present it, you're going to probably end up losing the deal on the transaction.
Yeah.
But I wanted to share something. Oh, go ahead, Dan.
Yeah. And I want everyone to hear this, because I think as a professional, and this is where we can really screw things up for people. Okay. If you're going to say, like Jeremy, his presentations, and like Dave was saying, hey, we're baking the refi pie. If you're baking a refi pie right now, you sure as shit better not be charging your customers 3 points to buy down their rate. That is financial malpractice, in my opinion. Okay. You better not be doing that. So loan officers listening up, give the options, leave it up to them. If they want to pay 3 points, and again, I'm a huge advocate for seller buy down, but hey, if someone is like, you know what, I don't know. I don't think they're going to drop. Let's take the sure bet. Cool. Let's do the seller buy down. But if they truly want to buy into what we're saying and showing them the charts, and they're like, you know what, I do believe they're going to drop, then go with that and teach that. But don't do both. I think you're giving bad advice if you're doing that. And it's almost a disclaimer to our call today that needs to be a disclaimer. Pick your show the options, but you better be able to educate around them so you don't hurt people with your financial advice.
All right, guys, we got 4 minutes. I want everyone to keep it to 1 minute. We promised ideas and strategies, and we've given about five ideas and strategies, but I know there's more. So I want to go rapid fire with all three of you. You got 1 minute or less. Scott, what are some other ideas and strategies? You're not going to describe them in detail. We can do that at a different call, but just give us a list of 2 or 3 other ideas and strategies right now.
Can
Go.
you see my screen?
Not yet.
Oh.
You got 1 minute. Now you got
Okay.
2 seconds.
So I'm giving you a peek behind the scenes to a realtor event I'm running on Tuesday. This presentation went to them out already. So it's a custom video. I addressed the whole office and the team. Nicholson, went on into detail. I set I gave them all of the strategies that we're going to be talking about. We're talking about increasing pre-approvals. We're talking about bringing affordability back. We're talking about submitting offers with a seller buy down. We're talking about countering lowball offers. We're talking about dropping price versus rate, helping them move up. So this is their homework. So when I come flying in, they've already seen my content. I framed the whole meeting. And then now it's about asking or answering their questions and then strategizing for the rest of the event.
Cool. Love it. Dan, rapid fire. Give us a couple more ideas.
Yep.
And Scott, if you could stop, there you go.
Absolutely. Deb just messaged me and asked if I would share, how do you explain the ROI on buying a home? So I want to share this slide. It's in my mortgage planning packet. You can all see it at mymortgageguydan.com. But basically, this is how I do it in a nutshell. $500,000 purchase. They put down for this scenario 3.5% down, which is $17,500. Closing costs are approximately $9,000. You add that up, it's $26,500. Let's say the market takes a complete turn and slows down, and we see an appreciation rate over the next 5 years of 4%, which won't happen. But let's say it did. Very conservatively speaking, on a $500,000 home, 4% appreciation over 5 years is 20%. That's $100K. House went from being worth $500 to $600. Over those 5 years, you paid down your mortgage. I use Mortgage Coach to figure this out. You paid it down to $450. The IRS gave you a refund on average of about $7,000 a year. Add all of that up, it shows you a 277% ROI over the last 5 years, and that's with a 4% appreciation rate. You just added $186,000 to your total net worth by buying a home. Don't worry about the market, get in the game.
Boom. All right, guys, we're in final wrap up. Scott, someone had asked about Lender Launchpad. If someone wants to learn more about that, where would they go and how would they message you?
Yeah, you just go to Lender. One, you can message me, but two, you can go right to Lender Launchpad, schedule a demo. It's right there. And I do demos every, Tuesday, Thursdays. So yeah, pretty
Go
easy.
sign up at Lender Launchpad, guys. Follow Scott on social media, private message him.
Yep.
Deborah, any ideas? And also, do the Todd Bookspan, close it out, do the win by noon close.
Well, we started with that this market is designed for all stars. And this is where some of you need to really ask that deep question to yourself and hold yourself accountable, that are you playing the loan officer game of chess or checkers? And if you just invested your time right now, you took an hour to learn, what are you going to do? Take time today, make your action plan. I would attempt to recreate at least one or two of these TCAs, record a video that you can then post on YouTube. Because remember, YouTube is like your employee that's always working for you. Like Dan said, he could easily send that YouTube link to that builder so he could help educate. If you're on Lender Launchpad, you can now just send Lender Launchpad's link because it marries the two. But take action. Don't just sit and keep your content and your knowledge a secret. We have got to equip agents, builders, our communities to learn these strategies so that everyone's making better decisions. And when you share it on social, yes, you can have other loan officers that copy what you do. But when you come from an abundant standpoint, like what Scott and Dan, I just love that you guys don't keep your business like this. You're open arms. That's really everyone in this community so that we can all be our best. And that's what, Mortgage Coach stands for. So be your best.
Be your best and collaborate, share, take action. If you're watching this on YouTube, all the important links that we've mentioned will be down below in the show notes. So you're watching this right now on YouTube, scroll down right at the bottom. There's little show notes and we'll have links to everything that we've mentioned. What about slowing down on social media? I've heard that it's a good idea to post less right now. What are your thoughts on that, Deb?
Well, Denise made a post yesterday that,
which by the way, I cracked up when I saw it.
Yeah, with the Full House twins, we totally missed the boat there. But I just want to remind everybody that this is not the time. And I know it's easy to do because you're looking at your P&Ls and you're looking for areas to lean up, but this is when you need to be investing more in your social media. Don't downgrade or take the foot off. This is the new digital era for are the lights on in your building? And, Dan was talking about framing and that whole Renee Rodriguez, people don't drive by your office anymore. So when they drive by on social, and that's when they're doing their research, does it even look like your lights are on? And how else do you control the narrative for people when, you know, they could go and look you up, and if you don't have a post in a while, they could create this story of like, dang, I know inventory's tight. Maybe they got out of the market. I know rates went up. Maybe they're just like every other loan officer who's in it when it's easy, and then they stop posting when it gets hard. So don't take your foot off the gas. If anything, you need to double down. And like Dan, I know Dan, you've been working on a new website, your studio, your podcast, like you're putting, this is what the all-star players do. They don't take their foot off the gas.
And I want to put that under the concept of data. You need to optimize all of your data. You need to make sure your past customer database is in Sales Boomerang or an alert platform so that you're getting every signal of who needs a loan. And guys, social media is data. Every person that follows you on social media, you need to be putting, you know, first of all, building your audience. You want more people following you on those platforms, so you have more data, more eyeballs. And then you want to put content out so that you're getting leads. Guys, the modern mortgage professional leverages data, leverages technology, leverages social media, and they leverage platforms like Mortgage Coach. So get after it. Reach out to Scott, another amazing best practice digital platform that's helping you deliver better presentations. So this call is a wrap, guys. If you got value, give it a like, share it with your mortgage friends. All you managers out there, I guarantee you there's at least a 10 to 15 minute segment that from this call that you should bring into your next sales meeting. And remember, if you're a branch manager and you're not doing weekly sales meetings, you're not doing everything you can to level up your team. Like guys, we need to improve our sales skills. We need to improve our strategy skills. At Mortgage Coach, we're going to bring training every day of the week. So check it out on our calendar. And all you branch managers, I hope you're doing a sales meeting a week and helping your team level up. Take care, everybody. Have a great weekend.
Thanks, guys.